everyone. Thank you so much for joining us today. I'm just going to take a couple of seconds here to make sure folks get into the room and can actually hear us. Really appreciate you all being here today and joining us for this session. This is something that we've decided to solidify here at Kingscrowd recently, which is hosting these investor events that kind of give you the inside look at why we at Kingscrowd have decided to invest in the companies that we invest in out of our Kingscrowd Capital portfolio. So during this session, what we're going to be doing is diving in on RISE Robotics and meeting with Hiten to tell us more about what RISE is all about. I'll kind of tell you about why we invest in. We'll have a discussion with Hiten. Then we'll have Léa, our analyst, who kind of led the charge in doing a lot of the analysis around RISE before we decided to invest, discuss why we decided to invest, and then we will also open it up to questions. And please feel free to drop all your questions into the Q&A section here, and we will work to get to as many of them as possible. And the hope and goal with this event is to really help you get the deep dive analysis and understanding of RISE Robotics to be able to make an informed investment decision, whether you decide to invest or not invest. So just another way of trying to educate and provide resources to teach you all about how to analyze these deals and help you feel confident about the investment decisions you're making. So today I'm super excited to have RISE Robotics on. This is one of our latest Kingscrowd Capital portfolio companies. I've met with Hiten several times now over the past many weeks to really dive in and understand their business. Coming from a family of mechanical engineers, something that I grew up with was understanding the value of hydraulics. And that may sound funny, but genuinely, I grew up with my dad being a huge hydraulics guy and always talking about the power of hydraulics and how it can do anything and move anything and be this really powerful force out there to accomplish things, right? Whether it's with excavators or different equipment. And to learn about this new kind of Beltdraulic system that RISE is developing that could be stronger and more reliable really kind of blew me away. And I didn't really believe it at first. But coming to understand the technology and what they're building is pretty amazing. And for me, the one major fear with getting into companies like RISE is amazing technology that either doesn't have a commercial application or is very far away from being commercialized, which is going to mean a much higher burn rate, going to need a lot of money to continue to invest in the technology, so on and so forth, right? And that can lead to delays in them actually being successful, exits, so on and so forth as well. And so what I really like about this business is they have clear commercial applications, and Hiten has actually been brought in to help figure this out and commercialize the business. And they're there. They're at the 1 centimeter line. Actually, they're actively commercializing now. And I think there's a lot to be said for that, and helps me get comfort with de-risking the investment and saying, okay, this isn't just technology. There's a real business here now that they can start scaling up. So anyway, a lot to be fascinated about this business, but I don't want to steal the thunder of Hiten. So Hiten, we're going to have him come on up here and discuss with you all what RISE is up to these days. And thanks so much for joining us today.
Hi, Chris. Thank you for inviting me, and what a marvelous introduction. Thank you so much for that. That really sets the stage for me to talk about RISE Robotics.
Absolutely. So tell us a little bit about your background, how you came into RISE, and yeah, where you guys are kind of in the journey of starting to commercialize the business.
Yeah, so I spent a large portion of my career at iRobot. Teams that I led shipped over 20 SKUs, took them to production. We shipped over 9 million units and generated over $2 billion in revenue. So I have a lot of expertise in taking complex electromechanical things to market. And then RISE will be my third role, either as CEO or president of a startup, doing exactly the same thing, is taking them to this phase of commercialization.
That's awesome. So I know you've made a lot of progress in getting this business ready to commercialize and even have some exciting news to share. So can you tell us more about where you guys are in kind of the life cycle of getting this into market?
Sure. So, like you said, when I first heard about what RISE was doing through a friend who was working at RISE, I didn't believe what they were doing either. And my friend said, you need to start taking a look at the patents. And so I looked at the patents and I was sort of blown away. I was like, okay, this looks feasible. This is actually possible. And then I asked my friend if I could come over for a visit, sign the NDA, and so on and so forth. Showed up, looked at the facility, looked at the stuff they had. It was running. They were testing it. Um, and then I also found out that they had shipped $1.5 million worth of product to the Department of Defense. And so at that point, it wasn't just specifically to the Air Force, and it had been accepted and gone through that whole process. And so for me, this wasn't just an engineering and technology company anymore. Through the defense contracts, they had proved that they had reduced it to practice, and all they needed was a little bit of help taking this technology that had been reduced to practice and sort of expanding the portfolio and getting it out into the commercial space. So I found that to be very, very exciting. And what I helped the team do shortly after I joined is to start to take a look at those opportunities that would get us either funding from venture capitalists or corporate venture arms and get us to break even as quickly as possible. And pretty much everything else I paused. And that was about 12 months ago. And you mentioned that we have an exciting announcement. We do. Last week, we got our first commercial PO for our cylinder samples. This is for an oil and gas project. We love this sector because our speed and efficiency helps our customers make a lot more revenues than they can with hydraulics, which means we are the clear winner in that space. So very exciting opportunity for us.
You also talk about, so I know one of your key applications is these new Beltdraulic, that's what I'm calling it, Beltdraulic, maybe that's not the right word, but lift gates for trucks. Talk to us about the lift gates and where are you in terms of commercializing, getting those in market with actual trucking companies?
Yeah, when I joined RISE, we had a partnership with Anthony Liftgates, and we're still continuing that partnership. The project was about, I'd say, 60% done. Shortly after joining, I asked for the PRD, the requirements document, and took a red pen to it and told the team, okay, now we're 80% done because I was able to redefine the requirements to an MVP that I felt like was easily accomplishable. And then I asked the team to take it to 90%, get us to a pilot, and then let the customers tell us what that last 10% would be. And during the course of this process, we did a couple of things. We crystallized the value proposition. And I also discovered something surprising about the liftgate business, which I'll share in just one second. So the value proposition for us previously, before I joined, used to be about efficiency, which efficiency and maintenance. Both of those things are true. But what I thought was more exciting was the speed aspect of it. So our pitch today is not about efficiency and maintenance. Certainly, all the fleets that we speak to will get the maintenance savings. They will be able to spend a lot less on maintenance. They will have fewer breakdowns because the system is more reliable. But the thing that's most exciting to them is when we talk about the speed. So our liftgate is twice as fast as a hydraulic liftgate. And our beachhead market for liftgates is food and beverages. And most food and beverage operators that are delivering these things end up spending an hour a day going up and down the liftgate. And so with our liftgate, we cut that down to half an hour, which opens up another 30 minutes for additional deliveries. And depending on the business model of who we're working with, that can be anywhere from $300 to $1,200 in revenues. And so the nominal average ROI for our product is 6 months, which is what makes it really exciting. So that's the new value proposition we're talking about. And people are really excited about that because they don't have enough people to service the lift gates, but they also don't have enough operators to make all the deliveries they want. Most of these teams are running very lean when it comes to people. They have money for equipment, but getting people has been challenging. I'll say the one exciting thing I discovered about liftgates is that it's a recurring revenue business. And most of the time, you don't find recurring revenue businesses in hardware. As we've spoken to potential customers and started to understand their needs and the changes that they want and the feedback based on the systems that they've seen, what's exciting to us is that they always talk in terms of orders per year. So folks want 30 units a year, 15 units a year, 50 units a year. And when I asked them why they were structuring it in that way, why they were asking for orders per year, they said that they replace 15% of their fleet of lift gates every year. So these products have a 7-year life and they're getting replaced constantly. And once you get in with a customer, you're basically in for life as long as you give them good service. And there's nothing like our product So once we win an account, we essentially have them for life. The lifetime value is practically infinite for this product, which is
When
really
can you
exciting.
start when can you start signing these contracts and being in market and commercializing and starting to scale up this liftgate business line?
Yeah. So from everything that I've learned about product development and companies that are doing it for the first time, one of the things I believe in strongly is pilots. And RISE Robotics has done a pilot of this product before. We got a lot of feedback, and the team has spent the last, I'd say, 9 months working through all of those issues and closing them out. The reason why I believe in pilots is because when you're building something for the first time, you can have customers tell you what they want. You can have, in this case, our existing partner, Anthony, told us a lot of the requirements. But there are these unknown unknowns that you only discover when your customers are actually using your product. If we had built this product before, we wouldn't need a pilot because we basically have a very crisp PRD of the previous product that we could tweak. So we're in the stage where we're trying to close pilots with early adopter customers. What has happened is in this process, we've gotten a lot of interest from large fleets. So the process of getting to pilot has been a little slower than we expected, but that's been offset by the number of deals we have in our pipeline and the size of those deals. So we're expecting to start our pilots this quarter, and then we'll build our first batch of pre-production units in Q4, which will be selling to companies that are not on the bleeding edge innovators, but they're ready to take a unit that's relatively early. So that'll be kind of the second stage. And then we're in scale production in the first half of next year.
I think when people hear liftgate, and maybe I'm misassuming folks who are on this call, but I think when they hear lift gates, they're like, lift gates? Like boring. How big could that really be? Really? Like, is there a big business here? I think there is, but can you tell us a little more about A, how big it is? And yeah, just help us understand the category and why it's so interesting.
Yeah, so the liftgate market is $2 billion a year in revenues. Of course, our product is a premium product. So when we enter the market, that market size is going to be larger because we deliver more value. And so we can capture more value. So for us, that market size with our product is going to be larger than 2 billion. And about 50,000 of these are sold a year. So we think there's a tremendous amount of space here. What the other part of the liftgate market that's exciting is that this is a joint development product with Anthony Liftgates, and Anthony has paid for a substantial portion of the development. So it's been very capital efficient for us to get this product to market. I'll say the third aspect about liftgates and our partnership with Anthony that's appealing here is that they've been manufacturing liftgates for over 30 years. So they know how to make these things. They understand what rusts, they understand what material to use, they understand what things break. These are things that we'd have to discover if we did it on our own. But because we have this partnership, we're able to start at 90% and then add the 10 to 20% that makes this a 110% product.
To learn something in my prior career as a consultant for private equity firms, it's the more boring the business and the less that people are paying attention to it, the more profitable and larger opportunities there are. They always said, if you really want to be rich, don't go into media or sports, go into waste management. Everyone needs that, and you can make a lot of money there. So industrial categories, I actually think, are phenomenal categories to invest in, and are overlooked and really provide an opportunity for investors. Let's dive in a little bit more on the actual technology. How does it work? What does it look like? And why is it better than hydraulics?
Yeah, so we call this technology Beltdraulics. It's sort of self-explanatory. We've taken a hydraulic cylinder, we've taken the hydraulic fluid out of it, and then we've replaced it with belts and pulleys. And belts and pulleys used to be the way that things used to be done. Well, not belts, but cables and pulleys used to be the way that things used to be done before hydraulics showed up to the scene. But what's happened is that there has been innovation in the belt space, and these belts are now so strong. They're designed kind of like a tire. So you know how strong tires have to be to operate at very high speeds. Except for rubber, they have polyurethane on the outside. So these belts are so strong that now the elevator industry is adopting them, and they're replacing the steel cable in elevators with these belts because they're a lot more compact and they last the life of the building. And the reason why they last so long is there's no steel on steel contact. The steel is lubricated before it's encapsulated in polyurethane plastic. And so you have something that's very strong and very robust. One other characteristic of this belt that's interesting is because it has multiple steel ropes on it, you can actually put electricity through these belts and you can figure out how the belt is aging. So even before a belt is going to break, in a similar way that a hydraulic hose might burst, we, unlike a hydraulic hose, can tell you that this belt is aging and it's time to replace the belt. And once the first strand breaks, we can say, okay, no more. You need to replace it right now. The system has to go down. So we have this ability to do on-demand maintenance, which is like the holy grail of maintenance with this technology. Trying to think if there's anything else I can share about this. Oh, so there are several advantages of using belts over hydraulic oil. Hydraulic oil is viscous. So when you try to push it through pipes and hoses and valves, you get eddy currents, which takes up a lot of heat. And also you can't move it very fast. These belts are moved very intentionally. So they're not being forced into orifices and things like that. So they move much, much faster than hydraulic fluid, which means our actuators can be 3 times as fast as hydraulic actuators. And then because there isn't a lot of friction, except where we want it, we're very efficient. From mechanical in to work out, we're 90% efficient. And when you add the motor, we're well over 75% efficient at the highest loads.
I mean, 75 and hydraulics, he said, is that 20% efficient?
Nominally 25. I mean, you can build very high efficiency hydraulic systems, but you can't control them well. So the nominally, when you think about the hydraulic systems that you'd use typically in any application, they're roughly 25% efficient.
Understood. So you're going down the liftgate channel. You have this PO with an oil and gas company. And I'm not sure what the application is there yet, but I believe you mentioned you can't speak to that right now. When you think about other applications of the technology, where do you go from here and how quickly are you trying to do that? Or are you going all in on lift gates for the next couple of years and then you'll focus on the next category?
Yeah. So the cylinders business, the book of business, is the thing that's going to get us corporate venture investment for a Series B or C if we wanted to scale, because there are a lot of OEMs that find our technology interesting, and I can see them either wanting to acquire the catalog of Beltdraulic cylinders for themselves to augment either their hydraulic business or their screw type business if they're in the actuator space. I can also see OEMs that are doing heavy machinery decide that they want to have this new class of equipment that's way superior to anything you can do with hydraulics or screw type actuators. So having that book of business on the cylinder side is important for us to exit. And that's why we're continuing to pursue that. It also allows us to start to get long-term contract wins, because once you get a design win into a vehicle or a product, you're in there for 10 years. You're not going to get out of it. So it basically creates this long-term cash flow, which I'm excited about. The liftgate business is interesting because that's the thing that gets us to break even quickly. And that's one of there are 2 things about the liftgate business financially that make sense. One is that because we're the OEM, we capture the top line revenue and we capture a lot more margin than if we were just the component provider. So that's the first part. I'll say the second thing about that business that's exciting is that it helps validate our core technology. We can point to something that's in the field, deployed at scale, and say, this is why you should believe that our technology is true. So the 2 sides of the business are very complementary in that way.
Interesting. Did you mention that forklifts is another category that you could be in as well?
Yeah, if I were starting this business from scratch, I would go after the forklift market. It's $8 to $16 billion, depending on what you include in that category. So bigger than lift gates. It's also one where we don't have to do a lot more engineering. Our technology is ready to be deployed in forklifts relatively quickly. We actually have a partnership with Danfoss where we expect to deliver them 2 cylinders soon to go into a container handler. Container handlers are used in ports. And as you know, most ports are trying to go zero emissions because they want to improve the quality of life of the people that live around those areas. It is waterfront property, but it's loud. There's a lot of smoke. Oh, with our technology, it doesn't have to be loud anymore. There doesn't have to be any smoke. So that's exciting.
Very cool. When we think about the sales strategy for your business, we could start with kind of the liftgate category. What is the strategy to start getting in there and closing these contracts? Is it a sales force? Is it your partner? Are they selling on your behalf? What will that look like?
Yeah, so my goal in scaling the business is to avoid fixed cost as much as possible. And so we'd be looking to create the right kinds of partnerships where it would all be variable cost, right? So there are a couple of different ways we have a go-to-market. So one is that the Anthony sales team is available to us to help sell our product because, again, we're totally aligned. If we sell more lift gates, they make more lift gates, they make more money, we make more money. So we have an existing sales team that I really don't have to, that's available for free. The second is every, what we call a channel partner that we've spoken to is really excited about our lift gates. The reason is that our lift gates take 5 person hours to install, whereas a hydraulic lift gate takes 30 person hours to install. And if you have a hydraulic spill, all of a sudden you're scrambling, trying to clean it up. You sometimes have to report because the oil is hazardous. So anyone that's installing lift gates would love to get hydraulic lift gates out of their shop so they don't have to deal with hydraulic oil, and so that they can do the installs faster and they can do more installs with the same number of people and they can make more money. So everyone in the value chain here helps us make money. So we see that these third-party installers and liftgate retrofitters as being our sales channel. And then we also see trailer and truck manufacturers who typically install liftgates at the factory at the request of fleets in food and beverage would also be our sales force because it's to their advantage for their customers to switch to our product as opposed to use a legacy system.
Are there any competitors that are similar to what you're doing, trying to play in any of these categories you're either in, like lift gates, or thinking about getting into?
Yeah, so companies that make screw type actuators, which typically work at low forces and short lengths, have been trying to build bigger systems to get into bigger markets. So, for example, most recently, some of these companies that are building screw type actuators are targeting flight simulators and things like that.
Mm.
And they have trouble selling those because the longer you make a screw type actuator, the more expensive it gets because the main element in that is the precision machine screw. And as you make that longer, there's more material, which is expensive, and it's precise machined material, which is difficult to make. And then the weight increases. So these screw type actuators become very, very unmanageable. And for us, increasing the length of an actuator is not a problem because the only thing we're extending is the rod, the cylinder, and the belt, all 3 of which are very inexpensive and commodity items. So we have a natural advantage towards screw type actuators that are trying to get into the bigger space. They have challenges because they have metal and metal contact, so they can't handle shock the way we can. I think, frankly, we don't have that much competition. We have competition in cost. If somebody wants to build the lowest cost machine, say a consumer product, that's going to stay hydraulic for a while. But anyone that's doing anything that requires high utilization in a dirty environment is going to find our product to be very appealing because their total cost of ownership is low. They'll make more money for the same utilization. In fact, they can shrink their fleet by a quarter, and I can get into that if there's interest. Whereas the screw type actuator just can't operate at those speeds, can't operate in those harsh environments.
That's really interesting. And we're going to bring Léa here who's our senior investment associate, to kind of go over more of why we decided to invest. Right, we take a very quant-driven approach in looking at all of this, so I'd love for her to kind of highlight some of those things. But in the meantime, Hiten, can you tell us what does success look like over the next kind of 2 to 3 years?
Yeah, so the team has very clear milestones. My first milestone for the team, which is going to be met this year, is we've got to sell 1 cylinder to somebody. That's done, right? So this whole process of like getting the team to the point that we can sell stuff, and that it seems like something very simple, but it requires us to build our ordering system. It requires us to have the right contracts in place. It requires us to be able to take money from customers, not from the Department of Defense, which is like its own beast, but to actually do it at a commercial scale. And so that it took us, 6 weeks to get all of the infrastructure in place, which we had in place as soon as the sale happened, which was very exciting. We have to do the same thing on the liftgate side. Once we've done that, our next target is $1 million in booked revenues. And our aim is to hit that this year as well. And we're pretty confident we can do that. And then the next target is break even next year. So those are the very short-term goals I'm focused on. I try not to get the company to think beyond 2 years. 6 months to 2 years is where our sweet spot for planning is right now because we have to be very, very focused. It's easy to get distracted by all the other cool things we could be doing. I mean, we have inquiries from forestry, mining, certainly transportation, logistics, certainly defense, maritime, um, and just many other sectors, right? And we can't keep up with all of them. So we're trying to be very focused on, okay, what can we deliver in the next 6 months? How do we do it? And how do we make sure that we're continuing to make a little bit of money and sort of increasing our margins over time?
And I think that's awesome and is the right approach. I completely agree. When investors ask for 5 year forecasts, it's like no one knows what the next 5 years look like. You know how many macro and micro things can occur in that timeline. The next 12 to 24 months, that's what's in your control to get after and really focus, right? Awesome. Well, Léa, let's get Léa up here, and I'd love for her to dive in on what we like about RISE Robotics and why we decided to invest.
Hey, thank you for joining us here, Hiten. Just, you refresh my memory about the whole company, and I'm like, yeah, that's why we invested. Really, still excited about it. So, um, so as Chris just asked, we invested in your company, I think, a couple of months ago. That was around the April timeline, and kind of all of the reason we invested are still here. It's better now because, as you say, you have that first PO that will start you on the commercialization route. It's very exciting. And if I kind of try to summarize the reason why we wanted to be part of your journey, the first thing I want to say is that you have clearly a superior product. I'm someone who's very excited about deep tech, but I see a lot of innovations that are not really innovative, products that are just capital intensive, but I don't believe they really have a market. And in the case of RISE Robotics Beltdraulics, you're building something that is truly superior to hydraulics. It reduces energy consumption, you have a higher speed, higher efficiency, lower maintenance. It just makes sense for companies to turn to Beltdraulics and kind of move away from hydraulics. But the product being superior is not the only thing, right? It's what is the price? How much is that going to cost them? And what is very interesting is that while you are hydraulics, it priced slightly higher than hydraulics, which is normal because it's a new product, is highly innovative. It will help companies not only reduce their cost of operations over time, but also generate more revenue. And I think that when you think about an investment, it's not only about is that an exciting product, but does it actually make money? Because ultimately, this is how decisions are made, and you're really, really solving that pain point. So that's very exciting as well. Another thing is the progress. You're at the commercialization stage. So the risk is way lower for investing in your company right now than if it was a couple years ago where engineers were still developing the Beltronic system. And, we could hope that it were going to work, but really we had no right here. Now you have the pilots done, you have potential clients that are aligned. So that's a very exciting time. And I feel like it's the right time to invest because the moment where you will start generating commercial revenues, it may be, kind of too late for investors to invest and really get that high return. So I feel like the risk reward profile is probably the most interesting right now. And the last thing, I heard Chris saying that lift gates are boring. Um, Somehow agree with that somehow now, because one thing that I've been trying to find in the market is a product that can truly electrify heavy machinery, and that's not boring at all, because that means that we can finally kind of move into a greener and just less carbon intensive way of using these heavy machines, whether it's lift gate or forklift, etc., which is a problem that has not been solved right now, and you're bringing one of the solutions that we need. And I know that some investors are mission oriented, some investors don't really care about that, but that's the truth. This is one of the positive aspects of your company. And so if you're an investor that likes the fact that you bring electrification possible into heavy machinery, that's also a big advantage. So that's why we invested. Chris, anything you'd like to add?
Oh, I appreciate that, Léa. The one thing I did want to hit on before we turn over to questions from the crowd, um, can you explain when you look at your financials and we'll share the report with you all if you want to go and check it out. Um, can you explain what the revenues that have been on the books, what those revenues are, I know there was a big drop in revenues between 23 and 24, but I think might be a little misleading because I think a lot of that was like grants or something like that. So can you just explain what that is?
Sure, yeah. So we've had 9.3 million in revenues till date. Um, about $1.5 million of that revenue is in sales of product to the Department of Defense under commercial terms. And then the rest of that is joint development revenues with partners. Um, you're correct about the drop in revenue between 2023 and 2024. In 2023, we shipped the $1.5 million in commercial products to the Department of Defense. There was not a follow-on contract. Um, the products that we sold were for a specific mission, and I think we fulfilled the early needs for that mission. And there's going to be a follow-on at some point in the future. I don't know when. However, in that time frame, so that's the Air Force. The Army has gotten interested in us, and we recently won a $250,000 contract with the Army, which is essentially a license to hunt. They've given us the money to build a prototype, visit Army bases, and work with them on solving their lifting and lowering needs. And the Army has an order of magnitude more machines that do lifting and lowering than the Air Force does. So that's exciting. But that is primarily the reason for the drop. Is we had this one contract. The contract, there was no follow-on. We expect a follow-on at some point as they start to deploy these in more and more planes and then expand it. So we've done the landing. The expanding for that particular application is going to be dictated by the Air Force.
Got it. And just having done this for many, many years now, it is fairly common to see this where companies like yourself in the early goings, you find a way to get contracts with the DoD to basically do R&D, right, and get paid for it. I think of it almost like grants, and then sometimes people lean into that, and that becomes the focal point of their business is to do that. And other times, it quite literally is used as a way to do R&D and get paid for it until you're ready to go actually commercialize in the commercial space rather than the DoD space. So fairly common thing that we see, but it can lead to kind of wonky financials in the early goings. But as long as you kind of understand why that is, I think then you could get behind it and say, okay, that makes sense.
Yeah.
Excellent. Well, with that, yeah, go ahead, Tim.
Yeah, I was just going to say that revenues that DoD contracts end up being lumpy, right? So there are times when you have them and times you don't, and then especially during times of administration change, there's sort of a, hey, what are the new priorities? And then there's a little bit of a pause, and then everything picks up again.
That makes a lot of sense. Well, with that, I would love to turn it over to the crowd. And if you have any questions, please drop them in the Q&A, and we'll try and get to as many of them as possible. In the meantime, we are also going to be opening up the RISE Robotics report on Kingscrowd, so you could check out why they scored a 4.7, why we invested, see all the metrics, where they rated well, and kind of get an under the hood look. So if you haven't checked out Kingscrowd before, this is your first time, definitely check it out and let us know, if it helps you make that investment decision.
Waiting for people to kind of drop questions. There's something hidden that is kind of an exciting news. You broke a Guinness Book record. Can you tell us more about that? And, is that just a fun fact or does it really matter for the business?
Yeah. So we won. We won the Guinness World Record for building the world's strongest robotic arm prototype. The team told me that we had built the world's strongest robotic arm, and I didn't believe them. And they said, no, it's really true. I mean, if you look out there, it's not. So I was so surprised, and I said, well, it's been on my bucket list to go get a Guinness World Record. Why don't we just all do it now? Why don't we make this happen? And so the team got really excited, and then we applied, and it was a rigorous process. We needed a third-party lab to come in and so on and so forth. The key part about the record that is important is that I can honestly tell people that Beltdraulic is strong. Because one of the things about hydraulic systems that, as Chris mentioned, you feel like it can do anything, which is why it's used in heavy machinery, right? And us getting that record basically says we can also do everything that hydraulics can with our Beltdraulic technology. So that's why that's been exciting. It's also created some attention. It's helped us certainly with our crowdfunded raise. It's helped us get business development. So we had folks who reach out to us and say, hey, seems like you're able to build some really big machines with this stuff. Let's talk. I've got some applications. So that's been exciting as well.
It's awesome. Who would be an acquirer of a business like RISE?
Yeah, so if you go to wefunder.com, we've listed the potential acquirers, right? So I don't want to specifically mention names here, but I will say that anybody that's building screw type actuators would benefit from acquiring us because we would be a complement to their portfolio. Where the screw type actuators sort of reach the end of the bell curve is about where we start. So our smallest actuator today is 2 tons. Our medium-sized actuator is about 22 tons, and we can go up to 44, and then we can start ganging them up in parallel, and so we can get to 88, 160 tons, no problem. Most screw-type actuators after 2 tons start to get to be significantly expensive, hard to manufacture. The other thing is, as I mentioned, we can build really long systems. So that's one other area where someone that's building screw-type actuators and has a customer that says, "Hey, I want you to build me this really long linear actuator with a long stroke." They wouldn't have something that's competitively priced to hydraulics at all. And that's where our technology would shine. So that's sort of one set of acquirers. And then certainly on the liftgate business, that can be sold as its own entity. And if we were to get into forklifts next, which I'd love to, as soon as we are cash flow positive, that's another vertical that we can start, get to a certain point and sell that as well. As long as we own the core technology, we can be building verticals and selling them off over the next decade if needed, or we could just end up being a multi-billion-dollar company. All options are available to us.
You talked about, getting to $1 million in book revenue this year. What's the path then to, 10, 50, 100? What gets you there?
So as I mentioned, liftgates are a recurring revenue business. And so you're familiar with the recurring revenue model to get to a unicorn, right? You get to 1 million revenues, then you triple the next year, you triple the next year, and then you double, 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 right? So you go from 1 to 3 to 10 to 20 to 40 to roughly 80, and you're close to being a unicorn, right? Because at that growth rate, close to 100 million with a 5x multiple, with a 10x multiple, you're close to being a unicorn. So that is kind of the long-term vision for how we get to being a unicorn.
In terms of, I know you talked about, I think there's 50,000 lift gates sold a year. How many do you have to sell to get to, 10, 25, 50, 100?
We'd have to get between 5 to 10% of the market.
Got it. And business model wise, I don't think we hit on the price point. What is the price point of your lift gates?
Yeah, currently we're baselining at 29,000, and we're competing with lift gates that are sold for 18. And as I mentioned, the price difference is really not an issue because the ROI is 6 months.
Right, because if you could do a couple extra stops a day and each one of those worth a few $100s, you get to that 10 grand pretty quickly.
Like that, yes.
Yeah, that's really, really interesting. What keeps you up at night? What are your biggest, concerns that you worry about?
Yeah. So the first one is the longer sales cycles in the B2B space, right? It takes a while to, especially the companies that we're targeting that have expressed a lot of interest are juggernauts. So it's a little challenging to get in, but once you get in, you're in. So that process of, as I mentioned, pilots has taken longer than we expected. But in that journey, as we're looking for pilot customers, our pipeline has gotten to be pretty big. And many of the companies in them are huge companies. So that kind of offsets my concern about the slow sales cycles on the B2B side. I'll say the second thing that concerns me is raising money. And it's not that we're not raising money, to keep the business effective and going on. And I have the support of the board. So if there are any shortfalls or gaps, they're going to fill it. The main concern is I'm still at that part in the S curve where an additional dollar gives you substantial increase in efficiency. So over the summer, we've crowdfunding is slower over the summer, so we've raised a little less money. We slowed a few things down, but it's very inefficient to even lose a few dollars, a few hundred, few thousands of dollars because we're in that part. I'd love to get to the linear part of the S curve where it doesn't really matter what our fundraise is. We're equally efficient as a company. I'll say that's the second thing that that sort of keeps me up. And it's thinking about how to make the best use of every dollar that I get.
Makes a ton of sense. When we talk about like other applications, right? Is the model always going to be that essentially you're selling like this technology belt package? Like for instance, if you got into excavators, right, for a Caterpillar arm, you're not going to go and create excavators. You're just going to create the function that allows them to have a non-hydraulic arm and instead have a Beltdraulic arm. So are you like, are you always going to just be purely the Beltdraulic technology and not create any of an actual forklift, an actual lift gate, so on and so forth, and you'll always find partners? Is that the thought?
We certainly like to find partners because they help us scale faster than we can. So somebody that already has distribution, has existing inbound of customers that have pain points, that are buying a portion of their portfolio, but have these other queries that they're not able to address. I mean, those companies would be ideal partners for us. But when it comes to OEMs, if OEMs don't move quickly, we're likely going to eat their lunch because I don't have to build a full excavator myself. There are many companies in the United States that are building excavators. There are many companies over the world that are building excavators, and they would love to get additional sales. And so all I have to do is tell them, hey, I'd like to white label your product. Please send me a sample without the hydraulics. We'll make some mods. Here are the design changes I need. And now I need 100 this year and 1,000 next year. Can you build them? And that partnership works for us, and it scales because they know all the pain points about building excavators. We know everything about Beltdraulic technology, and we're not afraid to stand behind our products and take the warranty for that. We'll have to find a distribution partner, but in some cases, those manufacturers already have distribution partners that we can piggyback on, just like we're doing with Anthony Liftgates. So this white labeling strategy, which works for us because we're generally very compatible with the form factor of hydraulic cylinders, is a unique technological advantage that I can use to get into verticals quickly and own them.
Last question for you here. For those who are kind of on the line, they're thinking about investing, they're not there yet, what do you want them to know in here?
That's a great question. I mean, I think your memo lays everything out so well that when I talk to folks and they're like, hey, I don't know if I should invest, and even employees are like, how do I talk to my family members about this? And I tell them, go look at the Kingscrowd memo. It covers the upside, but it also covers all the risks. It's very complete. And so for folks that are looking on the fences, I suggest that they go read the memo. It's on our WeFunder campaign page at wefunder.com/RISE Robotics. You'll see investment memo there. Just click and you'll get to see all the details and all the analysis that Chris's team has done. Chris, your team has done.
Amazing. Thank you so much. Hiten, thank you so much for your time and your insights and for what you're building. I think it's really awesome. Léa, thank you for providing the analysis of why we decided to invest. And to everyone on the call, we really appreciate you being here, taking the time to listen in. If you have any follow-up questions, feel free to reach out to us. We're always happy to chat. And if you found this helpful, drop us a note or make an investment and note that it was because of, a webinar like this. So we know that these things are working and providing value and helping you make your investment decisions. But have a wonderful day, everyone. Thank you so much for your time and hope to see you at the next one.